Hello there, this is James and you're watching Tixee Live. And a very good morning. In today's little program, there's a special event which I want to talk about, which I talked about a lot. So in that case, also happy Inflation Friday. So I'll obviously be talking about the all-important US CPI, doing a little preview on that. I would also do a little recap about the drama which happened yesterday with the ECB press conference. I'll do a little recap on that, and we'll have a look and see where the euro is trading right now on the back of that. But before I start, don't forget, these little programs or these little videos are for educational purposes only, and in no way whatsoever should ever be treated as a financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Right, first things first, let's do a little recap of what happened yesterday with the ECB press conference. Let's do a little recap on what happened with that. Okay, well, basically, not a lot of surprises. First of all, they did announce it was ending its asset purchasing program on the 1st of July, which the market was expecting. It also said it intends to raise rates by 25 basis points in July, which again, the market was expecting. It did, however, also added that the ECB does expect to raise rates again in September. Market got interested on the back of that. And then Christine Lagarde, who is the ECB president, she said, medium outlook proceeds as it is now. The increment would be higher than 25 basis points. What does she mean by that? Basically, what she was saying, if the current economic situation, i.e. inflation, remains high as it is, come September, then they may raise interest rates in September more than 25 basis points. That put the market into a bit of excitement. Suddenly the market thought, do you know what? She may raise it by 50 basis points. So, yeah, I will go through the reaction of what happened with the euro on the back of that. However, as the press conference continued, it disappointed because despite the fact, oh, good morning. Hello. Good morning, my friend. Very good morning. Yeah, we'll have a quick look at the Japanese yen in a minute. But good morning, buddy. Anyway, as I was saying, so yeah, as the press conference continued or unfolded, it sort of disappointed because, like I said yesterday, it was a case of like a dove disguised as a hawk, because she didn't really give a lot of forward guidance or confidence that a 50 basis point hike in September was possible. She said that line, yes, by all means, but it wasn't concrete. And she kept going on about change of regime and saying that what they're doing with the asset purchasing program, ending that, raising by 25 basis points in July, it should be enough to get them, get a good grip on the situation. And the market then started, questions started being asked by her, why aren't we doing 25 basis points now? Why aren't we doing 50 next month, like say the Reserve Bank of Australia? And she wasn't that aggressive. She was actually, like I say, a dove disguised as a hawk. So the market got disappointed. So let's have a quick look. Let's have a quick look now at what happened with the euro yesterday, and we'll go through all these scenarios. Okay, first of all, this is the euro dollar. Okay, now, like I say, when the initial announcement came out, it spiked down here. Okay, but then when they mentioned further rate hikes in September, the market got excited. So the bulls jumped in temporarily, for a little while, and it pushed the euro up to a key level, which I've been watching for a while, which is 1.07548. Once the press conference continued and there's questions and it disappointed, the bears took over. Okay, and the bears took over. And if you joined me yesterday, I said I was watching a key level of 106,650 because that was acting as a sort of potential area of interest, potential support. It did break through that area, okay, and it went down even further, and it's now currently trading at 106,296, so way under 107. If you look at a 4-hour chart, we can see a better picture of this. There you go. You see, these are often when I do sort of areas of interest, I look at longer time frames to give me indication of potentially stronger levels. So currently now there is a bit of support, potential support around 1.0670. That's also where the 200-day moving average is, and that's where it bounced from. So that's what happened to euro. A lot of drama yesterday, a little bit of hope, a little bit of time for the bulls, but overall the bears took over on the back of that. If we have a quick look at the euro sterling, very similar situation. Again, was bullish initially on the initial announcement, but then came under a lot of pressure and is currently trading now at 0.85174. So a very good, very dramatic day for the euro yesterday. Okie dokie. Let's get on to the main thing. Sorry, my throat's getting dry. The main thing, which of course I'm extremely excited about, I have been all week, and the market is indeed waiting for, and that is, of course, inflation. Friday is finally here. In other words, what I'm talking about is the US Consumer Price Index. Now, there is 4 CPIs coming out today, and I'll go through both of them. All 4 of them with you. We have the US, Consumer Price Index, month on month. Expectation, 0.7%. Same time, we have US Consumer Price Index year on year. Expectation, 8.3%. That was the same as last month, 8.3%. So they're not expecting an increase on year. Then we've got US Consumer Price Index, excluding food and energy. So this one doesn't include the price, it includes the price of goods and services, the increase in price of goods and services, but it doesn't include food and energy like the other 2 previous ones I've just shown you. Month on month, 0.5%. And year on year, excluding food and energy, year on year expectation, 5.9%. Now, a lot of banks are focusing on the different CPIs. A lot of them do tend to focus on this one a lot. This one comes up a lot, Consumer Price Index, because that does include, obviously, oil and food. 8.3%. Don't forget the target for that by the Fed to control is at 2%, so it's way above their target. Commerzbank does believe that is going to be coming in at 8.3%, and that will indeed put pressure on. Well, let's have a quick look at that. Sorry, lost my banner. What was I going to say? Sorry, they think it's going to be 8.3%, which will then possibly force the hand of the Fed as well. Société Générale, or SocGen, they think, and they're focusing on this one. Not this one, sorry. This one is what they're focusing on. They believe because of the surge in oil prices, this could range between 0.7 to 0.8. So they think that's going to go up higher. But either way, this is a big event which the market is going to be looking for. Usually the rule of thumb is if it's higher than anticipated, you'll get dollar strength. Usually the rule of thumb for dollar strength is that this obviously causes the Fed to increase interest rates. There's a lot of fear about the Fed increasing interest rates, and that's slowing down economic growth. We talked about stagflation the other days, where we got high inflation and slowing growth, which we have got potentially on our hands at the moment. So, but the market, like I said, if the number does come in a bit higher than expected, instead of seeing the dollar strength because of the dollar strength, we could see dollar strength because the market gets fearful. The market could get fearful and rush to safe havens. Gold will be another one to look at as well. In particular, gold, it could be the potential mover on the event. And so, that's the thing. Don't forget, of course, obviously, the CPI is due at 12:30 p.m. UTC. Now, let's have a quick look at the market at the moment. And there was an interesting question here about the Japanese yen, which we'll have a quick look at. And let's have a look. Very insightful to see you use the MI as a guide for support and resistance. Yes. Sometimes I do. I look for it. I tell you what I do when I bring my chart up, but that's a good question. Okay. So let's pull my chart up and have a quick look at this. Let's have a look. So first of all, let's look at the dollar yen, because that was an interesting question we have there. Okay. So this is the dollar yen. It's currently trading at 133.740. Like I say, there's a bit of a sell-off, but if you look at this 4-hour chart, here, pull it in better, it's still trading around that trend line there. So that trend line is offering a little bit of buying opportunity potentially. So that's where it's at the moment. I'm expecting the market to be a little sideways at the moment till the CPI, because I can see the market positioning themselves to get ready for the announcement. So I can see it's being a little bit sideways. To answer your question about, why I use the moving averages as potential support, I do look at them as an idea for support, but then I tend to look at where the price action is. So if you look at the euro again, as my example here, yes, it's there, but I've also drawn the line. So when I draw a line there, two potential things are giving me an idea of an area of interest. So I'm backing myself up with the idea. So I'm not just relying on one. I look at the two. So that's how I use it out. You see? Another swig of water again today. So yeah. So at the moment, like I said, I do think the markets are going to be a little bit sideways till we get to the big event later today. Later today. So yeah, that's going to be really, really interesting. Really interesting. Double tap. What do you? Good question. What do you mean by that exactly? Double top. Sorry, I read tap. Let's have a look at the Japanese yen again. Okay. I can see what you mean, but I'm more interested in this trend line here, to be honest. That's what I'm going to be keeping my eye on that area there. So that's the main thing I'm going to be looking at. But yeah, okie doke. So, like I said, big thing today is happening at 12:30 p.m. UTC. I will be doing a watch along. Those who've watched me know all week I've been banging along about me doing a watch along because I'm really excited about it. I am really excited about it. And like I say, I will be going live at 12:20 p.m. UTC, so 10 minutes before the event. Those 10 minutes will be used previewing it even more in a bit more detail, doing a breakdown, looking at potential scenarios, and then looking at what instruments or what assets I will be looking at. And then, of course, as the event happens, it'll be live on screen, and together we can watch the, hopefully, drama unfold. Knowing my luck, because I've been building this up all week, it'll probably be, nothing will happen. But I don't expect that. I do expect something to happen in the market. So please come and join me. I'll be starting at 12:20 p.m. UTC. Please come along and join me. It'll be an exciting event. Hopefully, I haven't built it up too much. Anyway, as the market stands at the moment, fairly tepid. 0.35%, FTSE's down negative. DAX minus 1.26%. Eurostoxx 50 currently trading minus 0.71%. So fairly tepid there. Don't forget, you can ask me questions anytime, like my good friend does. It's always good to see you, buddy. It's always really good to see you. And I love the fact you ask me questions. But this is what I'm here for. So please feel free to ask me anytime you wish. So yeah. Is there any more questions at all? Anybody else like to ask me anything? Okay, no problem. Cool. So anyway, once again, don't forget, 12:20 p.m. UTC, I'll be going live again for the watch along of the US CPI. And as always, if you're watching me on Facebook and you like it, give us a follow. If you're watching me on YouTube and you like it, by all means, subscribe. Hit the notification button so you know next time I'm going live. And if you've enjoyed this little episode and find it useful, give me one of those. It's nice to know that you liked it. But anyway, till later. Remember, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time. Every single one of you, trade safe.